Sterling remains at a 3-decade low, but it's not necessarily a bad thing, with Brexit Secretary David Davis saying it would help exporters. And the former Bank of England Governor Mervyn King described the pound weakness as a welcome change. Well, one person that predicted the sterling's rapid decline was Leroy Lawrence, the CEO and founder of Quadron Capital, who joins me now. Now, you were here, weren't you, the day before the EU referendum, right, and you were talking about parity with the dollar. Well, we did reach that at a certain point, and we're still loitering around there. Well,
I did say it'd fall down to about 1.15, about 20% down. It did for a moment, for a few milliseconds, hit that kind of price. At the moment, we're on a negative trend towards the 20% from that original point as well right now. So we do expect it to pounce around that sort of lower point, though I am expecting a sideward movement for the rest of the year, and up to about 1.25 is what I would expect.
You also said that we were going to remain low for about 10 years.
I think so. I mean, this is a massive repricing down to this low. A few years ago, we were at 2 to 1 on the dollar. Now we're at 1.25, 1.2 sort of area. This is a massive repricing. Everything I say and everything everyone says about the price of cable and where the pound is going is ultimately affected heavily by comments from Theresa May, by Tusk rather, and by people at the Bank of England, which we're about to see some more words from Mark Carney today as well. So everything you say and think about, you have to take on board that may change very quickly, just as we saw in this what's officially called the flash crash a few days ago.
Do you think we'll get another flash crash?
It could be. It's so pertinent to listen to what's going on with the big players and what they're saying, that if there is even further push for a hard Brexit, then I would expect there could well be another hard crash. But even with that in mind, I still think that by the end of the year we'll be around 1.25 as we see an upward movement from there.
1.25.
Yeah.
Okay. I was saying earlier that actually some people are saying that this pound weakness is a huge advantage. Obviously, we've had the FTSE soaring in consequence of that. You also were saying that actually we're a services exporter, 80% of our economy. So actually it's not that much of an advantage. That's your case, right?
Yeah, it really depends what market you're in. And if we're trying to roll back the years and go back to 1970s Britain, where we were still heavily involved in exporting, then fine, but it's just not realistic. The thing with capitalism is that we're living in neoliberal times, so the market has to decide. We have to keep moving forward. The past seems great, but we have to move forward to make Britain continue to be a powerhouse.
Okay, and in terms of trading the sterling, do you still think it's a wise move?
I've been staying clear of it the last few months as I look at it. Our algorithm's actually in it today, long a little bit. So we have put it back on our list of pairs to trade again. So I would say if you like to see some quick profit, I would get involved with cable. I would be looking to be a little bit heavier towards long right now. I'm saying that very tentatively because it is quite a high risk, probably the most high risk pair right now.
Let's talk about other pairs.
Okay.
What about with the euro?
The pound versus the euro. It's a more complicated issue, really. The euro, we expect to have, kind of predicted to have an inverse reaction to the pound, but realistically it's not. There are so many other factors involved. It's a much more complicated pair to trade. I would continue to look at the pound versus euro purely technical terms at the moment, which is in contrast I would look at pound versus dollar.
Okay, because pound versus dollar, you're all about the news, aren't you? Can we talk about the news stateside then as well,
Sure.
and the appreciation of the US dollar, because a lot is feeding into that, the rate hike situation, or lack of them I should say, and the US election.
Of course, so we're still expecting to see a hold on the rate hike right now. Today we're going to see retail figures, which is very important news on US markets, expecting to see better than expected returns. So we should see a rally on the US priced pairs. And also with the election coming up, I think, when's that, in November, so not very far away. Right now it's not one to be concerned about if you're trading, daily trading especially. I guess we will expect that if Trump is in power, the market should crash. I don't think it's going to be, so I wouldn't really worry about that too much right now.
But we thought about that, about the referendum, didn't we, when you were last here? So what can we say?
Yeah, my opinion was dead in line with the market, which was that we wouldn't have a Brexit. I and the market were totally wrong on that side, but let's concentrate on the things I was right about.
Yes, which is a lot. So you were absolutely spot on in terms of the parity, because as I say, we did reach that, didn't we? And you are expecting to have sterling weakness for the last well, next decade or so, right?
I would say so, yeah.
Okay, we'll leave it there. Thank you very much
Thank you.
indeed. We were talking about the sterling once again there with Leroy Lawrence, the CEO and founder of Quadron Capital.